Southern California, welcome to Money Matters with Dino. Saturdays from noon to 1, right here on Power Players Radio, KTLK AM1150. Do you own a home or have plans to in the future? You'll get all the information you need to know about what's happening in the local real estate market and how to take advantage of that knowledge. How to approach home ownership or mortgage financing with design, vision, and focus, as well as accurate information. Whether you're buying, selling, or investing, listen to Money Matters with Dino right here on Power Players Radio, KTLK AM1150.
Welcome to Money Matters with Dino, the most important hour of radio for Southern Californians every week. My name is Dino Katsiametis, and I want to thank you for joining today's conversation. Sounds like a bold thing to say, the most important hour of radio, but if you're listening right now, I guarantee that by the time this show is over, you'll have learned something valuable. You go to our website, moneymatterswithdino.com, you'll see the tagline, From Your Estate to Real Estate, where your money matters. That title, it sums up what our show is all about. It's about money, your money. My goal and purpose for this show is to educate you regarding your money. Now, that can be anything from buying and selling homes to the stock market or even starting a new business. How do I do this? I seek out top professionals in their marketplace, and I have them share their years of experience and knowledge with you. Now, I know real estate, and I'm a lifelong entrepreneur. I even have knowledge in some other fields, but I don't consider myself an expert in all areas of business. Therefore, in this show, I bring you respected professionals that are experts in their fields because it's critical to me that I provide you with accurate and up-to-date information, and I take that very seriously. Like I mentioned before, my expertise is in growing and managing wealth using the vehicle of real estate. Having decades of experience and extensive knowledge in helping people with their real estate needs has convinced me that real estate is still one of the many and best ways to grow a steady and secure portfolio of wealth. But it's not the only one, and that's why I call the show Money Matters. The other, and I think the greater reason, is that money affects your quality of life. Every financial decision you make affects every aspect of your life, from where you live to how you live. And if you're a family man like me, it also affects if and where your kids will go to college. Think about that. Every financial decision you make today will affect your quality of life tomorrow. Decisions that will affect what neighborhood you live in, what schools your kids will go to, if your kids will be able to play an organized sport or even learn an instrument. I know that sounds silly, but it's not. All these things cost money. I know as well as anybody does, you don't want to say no because of money, but too many of us have to, too much of the time. Money, when managed properly, will enable you to say yes. And more importantly, understanding money, whether it's in the stock market, real estate, or stuffed under your mattress, can protect you from turbulent times like we recently experienced the past few years. Here's something I love to say, and you're going to hear me say it a lot. And this is coming from a guy that loves real estate. Don't just get real estate rich, get rich. And we're here to teach you how. I hope you enjoy this show. Before I get into what we have in store for you today, I want to share with you this week's words of wisdom. It is remarkable how much long-term advantage people like us have gotten by trying to be consistently not stupid, instead of trying to be very intelligent. Charlie Munger. Did I pronounce that right, Phil? Is it Munger or
You got
Munger?
it. Munger.
Munger. So this quote made me laugh because it's so true. I think too many of us are basically afraid of getting into investing because people don't think they're smart enough or their friends just got burned a few years back. They want to be smarter than that, but it's not about being smarter. It's about understanding the fundamentals of investing and sticking with what works. Do that over and over again, and you can make money. While you're at it, put together a team of experts to handle the details that you haven't had the years to learn. How do we do this? Well, stay tuned, because with me today in studio, we have Rob Sechrist from Pelorus Equity Group and Larry Boodman from Keller Williams. In the next segment, our guests will join us in our discussion panel with the experts. Today, we're addressing the extremely important topic of how to invest in real estate and avoid risk. Don't miss out on this discussion. And as always, our last segment is the Ask Dino segment, where my producer Phil will ask all the questions that you, the listeners, have emailed us or Facebooked us. And I'll use my personal and extensive knowledge and experience to make sure that those questions are answered hopefully as accurately as possible. Phil sometimes looks at me kind of funny, but remember, Phil, I am the pro.
That means nothing, yeah.
Now, if you have any questions for me or you'd like to get in touch with any of our guests, give us a call at 949-720-1616, and we'll be glad to help you. That's 949-720-1616, or check us out online at moneymatterswithdino.com. Use us as your resource for wealth. This segment is brought to you by DLS Transportation. It's a limo company. It's a private jet airline company, helicopters, yachts, basically anything you want. These guys will put together the trip of a lifetime for you, for the transportation piece at least. And I want to just say a quick thank you to DLS Transportation for sponsoring our company over here in our show. They're always getting us to where we need to be in a first-class manner. So thanks, guys. I really appreciate it. So co-hosting with me today is my producer, Phil Giagrande. What's up, Phil?
I'm good. I'm waiting for you to say my name right, but go ahead.
I'm going to keep saying it wrong every week.
Yeah, I'm good.
Until you change it.
What are the chances?
I don't know. Go with Phillips or something.
All right.
All right. So tell us, what do you have in store for us today?
Okay. Well, since we're talking about avoiding risk, I found an article on avoiding foreclosure. And it says that late mortgage payments do not automatically put a home into foreclosure status. Each state has different foreclosure laws and procedures. Not panicking is important when financial problems arise. Housing is the most important part of the household budget. Foreclosure help sometimes is available through private banking institutions. Taking action as soon as financial pressures start to hit the household budget is important. Before payments are missed, start a strategy for avoiding foreclosure. Think about what can be done quickly. And then it goes on to say, many homes can be rented out completely or partially. Renting the entire home can pay for the mortgage and all costs associated with the home. Homes with furnished basements or garage-style apartments can be turned into two separate streams of income. Inexperienced landlords can take on the task of collecting rental payments or include the property management costs in the rent. A real estate agent can help to quickly rent out the properties. And that's one of the things I never really understood, why people don't do that, why they don't sort of see the foreclosure coming. You know, if you're going to have trouble making payments, and if you're going to get into that situation, I think at least a couple months ahead of time, you can find renter, especially in a renter's market. You can find renters all over the place at this point. So why don't more people think about that and start subsidizing themselves earlier on?
So that's a good question, Phil, and I got a good answer for you.
Okay.
Do you remember a guest we had on a while back, a few months ago, James Burns?
Sure.
He's an attorney and tax man and the whole bit, and he had a quote, and I can't remember it verbatim, but it was something like, "Don't be a sand crab." In other words, pull your head out of the sand, and or something else if that's where it's at, and start looking towards the future. The problem is when something like that happens, it's very much an emotional thing, and many times you hide from stuff like that just because it's too difficult and you shut down. And a lot of times also when you have a family, you start panicking a little bit, and you typically stop making good decisions when you get to that state.
Yeah, I wonder if that's the bigger part of it, because I don't have a family. So for me, it's easier to look at my condo as something that's an investment, and I can leave it or stay in it either way. It's not going to make much of a difference.
Yeah, no. When you have a family, everything changes. It's your home. It's where your kids and wife are, and it's where your friends are, and
hopefully your friends.
Yeah, right. I can't tell you how many situations though that I've seen where whoever the financial person is, let's just call it the husband, doesn't even tell his wife the situation they're in. I mean, until it's literally too late.
Wow.
A few days before she finds out they have to move. They're getting booted, foreclosure. Fortunately, less and less foreclosures are happening, and we got greener pastures ahead of us. Don't you think?
I do.
You're listening to Money Matters with Dino on KTLK AM1150. We can be heard every Saturday afternoon from 12 to 1. We're going to be picking up an extra hour now from 1 to 2 coming up here. So make sure you listen for that. If you have any questions at all about anything you've heard here today, or you'd like to inquire about a refinance or purchase of a home, give me a call at 949-720-1616 and let me help you make the best real estate decision for you and your family. That's 949-720-1616, or check us out online at Money Matters with Dino. Coming up after the break, we have our panel discussion with the experts, and joining us today is Rob Sechrist from Pelorus Equity. He's a returning guest of ours, and he's always a wealth of knowledge, so can't wait to talk with him. And also from Keller Williams, we have Larry Boodman, a.k.a. Booty. And I read that on your Facebook or something. And I got to tell you guys, it ain't no bootylicious over here either. My goodness. I'm really curious to find out how he got that nickname. Must have been the younger years. Anyways, we're going to be talking about how to invest in real estate and avoid the risk of it. And then also how to get your purchase offers to have the same weight as an all-cash offer, which is going to be really interesting, especially with what's going on in the market right now. We're gonna really enjoy hearing that one from our guest. While you're waiting, think about your financial goals and ask yourself, am I protecting my current real estate investments with knowledge and investing in a way that will make me real estate wealthy? Stay with us. We'll be right back.
When it comes to purchasing or refinancing your home, turn to someone with experience, CHL Mortgage. It doesn't matter if you're a first-time home buyer, purchasing the home of your dreams, or refinancing. The team of mortgage specialists at CHL Mortgage provide you with superior knowledge and service. Their ultimate goal? Getting the highest quality loan at low rates. Their second goal? To create a lasting relationship with every client and continue to provide excellent service for years to come. If you're looking to purchase or refinance, call the experts at 888-814-3335. That's 888-814-3335. Get additional details at www.chl.cc or call their office at 888-814-3335. Finally, a reputable legal firm. CDA Law Center, a nationally recognized nonprofit homeowner advocate, one of the most trusted firms in the country for helping consumers with their loan modification process. CDA's attorneys have decades of combined experience guiding their clients through the very complex and choppy waters of loan modification. Call 877-499-4435, 877-499-4435. Finally, honest and ethical advice to gain real results. Call CDA Law Center at 877-499-4435. That's 877-499-4435. Or check them out online at cdalawcenter.com.
Welcome back to Money Matters with Dino on KTLK AM1150. If you have any questions for myself or for my guests here today, if you need help with your money matters, give us a call at 949-720-1616. That's 949-720-1616, or check us out online at moneymatterswithdino.com. This next segment is brought to you by CFAM Credit Solutions. It's kind of a mouthful for me, but CFAM Credit Solutions, specializing in credit repair. I've been using these guys a lot for my clients, guys, and they are doing a fantastic job. If you have little things on your credit that just need a little cleaning, some derogatory items that are from the past that need to be removed, they've been doing an amazing job doing that. I suggest you look them up online. You can actually go to Money Matters with Dino, and there's a credit, their logo is right there. Just click on it and fill out the information. They'll help you out. Joining us today in our discussion panel with the experts is Rob Sechrist from Pelorus Equity Group and Larry Boodman from Keller Williams. Today we're going to be talking about how to invest in real estate and avoid risk. Welcome to the show, guys.
Thank you.
Hi, Dino.
So let me start with Booty over here. That's his nickname, I guess. Larry, tell us how you got your nickname first.
It's very simple. It's much less dramatic than you'd probably hope, but it's basically after my last name. It's been in my family for years, Boodman. My father's a booty. My brother's a booty. My grandfather's a booty. We're all booties.
So it's nothing to do with Bootylicious.
Has nothing to do with Bootylicious. It's just I have a lot of friends that don't even know my name is Larry. They just call me Booty.
Booty.
Or Boot or some variation of that.
Would you mind if I call you Booty?
I do not mind at all.
All right, Booty. Tell us what you do. You're with Keller Williams.
I'm with Keller Williams. I'm really excited. Actually, just joined that group. They're the number one agent firm in the country now, from what I understand. So I'm with the Sadoni Realty group and the team, and very excited to be aboard.
Well, I'm happy to have you here. I do a lot of business with that whole group down there. They are a first-class organization that I can vouch for personally, and very hardworking. It just seems like I'm getting emails from your group all sorts of hours through the night, introducing me to new clients and asking questions and all that. So thank you for the business down there too, and welcome to the show.
Thank you.
Rob Sechrist, we've had you on the show now, what, 3-4 times?
Yes.
I think that means you must be good.
Well, let's hope so.
So Rob is one of the owners of Pelorus Equity Group, and again, a company that I vouch for because I've used many times in my mortgage business. Rob, tell us about Pelorus Equity Group.
Sure. So Pelorus Equity Group is an asset-based lender that primarily focuses on rehab transactions. We go out and underwrite our transactions looking at the value of the property as the primary source of collateral when we underwrite these transactions. Most of the stuff we're doing right now is rehab stuff for most of our borrowers.
So, and some of you don't understand what that is. They're private money lenders. So basically, if you have a hard time qualifying at an institutional bank, or you don't have the time to sit and go through that process, a place like Pelorus Equity Group will basically underwrite your file and get you through the door very quickly. You guys can typically underwrite in what, 10 days or less?
We've been able to close transactions in as little as 3 to 4 days.
Wow.
But that's in a perfect scenario where we have pre-existing relationships with the borrower, title, everything has to line up to do that type of closing.
And you guys also do trust deed investments, which on the flip side is basically if somebody has extra money. Correct.
We have two components to our business model. One is the borrowing side, and the other side is the investor side, where we underwrite the investments and then offer them to our investors.
All right, well, let's get started in our panel. And so obviously, most of us see real estate as a good investment, and we all know that there's risk, especially after what happened in the last several years. But today I want to talk a little bit about some of the taking the risk out of investing. And you guys are the perfect guests here today because your extensive knowledge, I think you'll be able to relay out to everybody listening right now and hopefully be able to teach somebody a few things. So let's just get started. Let's talk about the different kinds of investors. You know, and Rob, I know in your company, you deal a lot with rehab flippers, for example. What's the difference, or is there a difference between those two?
Well, flippers, in our opinion, is somebody that just simply buys the property and is able to just turn it and sell it immediately with little or no improvements to the property. A rehabber, in our opinion, is somebody that buys the property and does some improvements, some rehabbing of the property to get it to be able to be sold on the retail market.
Now, I know back in the day before the market crashed, when the market was just completely out of control, there were a lot of people that didn't have to do anything. They just bought a property and then literally flipped it. Is that market back yet? Are we able to do that?
So we saw that happen in the first leg of the market increasing. Those opportunities were out there, but we don't see those opportunities where they're simply able to just purchase it and resell it for our investors or our transactions, but not to say that they're not out there. We're not seeing those. Most of the transaction, if not all of them, now have some amount of improvement, whether it's rehab or a full remodel on the projects.
Mr. Booty, how about you?
I'm coming from a perspective of more of a traditional model where you have a seller in their home that wants to sell, and right now we're seeing a huge influx of buyers that are ready to buy, but the inventory is very low, and so they're competing with a lot of cash offers right now. And so I'm coming from the perspective of how can we make our buyers compete with an all cash offer and make that work. So
are these all cash buyers though? Are they buying a house for them and their family, or are they buying as an investment?
That's good. That's a good question. A lot of them are buying as investment, and it's hard to tell. You may have a buyer on the sidelines that's getting frustrated with their traditional lending process, so they decide, you know what, I'm going to scrape my cash together, I'm going to get some cash, and I'm just going to go all cash. But for the most part, all cash buyer usually signals that they're an investor. And they want to come in and they want to rehab, or they want to flip it or rent it or do something with it. They're not necessarily coming in to buy the home for their family and they're going to stay there for 20 years. That's what we're seeing.
So that actually brings me to my next point, between a long-term buyer versus a short-term buyer. You know, in your guys' opinion, which one's better for real estate? Who should somebody be if they're out there looking right now?
You need both. The short-term buyers are the people that are taking the risk on the transactions or the properties that are so distressed that a long-term buyer wouldn't have bought that property, and thus the bank couldn't have gotten rid of it. So you need both types of borrowers to make the market work. You need the people come in and have the ability to make those all-cash offers or to make those improvements or have the time and the infrastructure to make that happen, to get the property to be able to be sold on the retail market, which is more traditionally the long-term buyer. So you need both elements.
And, just speaking from my own experience, I've owned several rental properties, and you have to be open-minded and flexible. And the reason why is because I'll give you a perfect example of a time I was out looking for a home, and it was meant to be a long-term home. That's what I was looking for. But I came across a house that I normally wouldn't have bought. It was a little larger than what I wanted, and it was a little more expensive than what I wanted. But it was such a good deal that I bought it for a short-term ownership only. I mean, in my head, I bought it for a 1-year period. And the reason why I picked 1 year is because I didn't want to pay short-term capital gains. So the second basically it hit 1 year, I sold it. And if you can know what you're going to plan ahead of time, there's many things you can do, all the way down to what kind of a loan you can get for it. For example, at the time, there were 6-month loans available. So I did a 6-month adjustable loan. My interest rate was ridiculously low. I think it was like 3% back then, which, rates were probably 6%. And I was able to save a lot of money during that time. So, if you're open-minded and you can seek the right counsel from people, I think you can probably get yourself into many different investment vehicles in the real estate market. If you need any help with any of this stuff, either through me directly or through the guests that you hear here today, just give us a call. We're at 949-720-1616. That's 949-720-1616. All right, guys, here's another question. Should an investor buy for cash flow or appreciation?
Another good question. It really depends on what your goals are. I tend to think appreciation is the long game, and I think if you're looking to invest in real estate long term, then you're going to go for the appreciation. You're not necessarily going to be in it for the cash flow. But to echo what Rob said, I think you do need both in a healthy market. You need people that want to get in it for cash flow, and then people that want to get in for appreciation. It really comes down to what your goals are, and like you said, being open-minded and knowing the market that you're buying in.
What about you, Rob? What do you think? Is there a better way to go?
I don't think there's a better way to go. Looking at it with just those two terms, I would look at it on the amount of investment, the weight of the risk, and looking at how much the return is. So I wouldn't look at it just by long-term, looking at cash flow or appreciation. I would want to know how much cash flow or how much appreciation over what amount of time, what amount of capital was out, and what the exposure was.
Okay. Safe answer, Rob. All right. So we're trying to break down all the different investors in real estate that you could be. There's another one, too, that doesn't actually involve owning the real estate. But it does involve owning the paper that has the real estate. And that's one of the things I'm going to let Rob talk on, because it's trust deed investing. And basically it's when you play bank. So, Rob, can you explain to us how that works?
Sure. I actually kind of term it as an alternative secured cash flowing investment in real estate asset class.
Now, that's a mouthful.
Basically, what trust deed investing means is that for a company like Pelorus, when we go out and underwrite a transaction, we do all the underwriting of that, and then we offer it to our investors. Our investors have the ability to select which transactions they feel comfortable with investing in. And once they agree to that, then we record that investor's name on the deed of trust, which is recorded on title. So they are the lender for this particular transaction, and they are going to get the cash flow from the yield from the payments that are collected from that borrower when we collect them, and then we'll disperse them out to that investor.
So basically, if you guys have somebody with money, you basically put the deal together for them, you present it to them. If they like it, they go on title. They take all the risk.
That's correct. They're involved in the decision-making process all the way down the line.
Now, I would think some people have that experience, but if somebody doesn't have that experience, why would they want to go through somebody like Pelorus Equity? I mean, you guys underwrite the file, basically.
Sure. We've done thousands of transactions and raised over $500 million between my partner and my career, and that's combined over 30 years. And a private individual that would want to invest in these types of things, they're precluded from doing it from a number of reasons. One is that they cannot get the amount of yield that we're able to offer to our investors unless they're a registered broker themselves, because it would be usury. So there's legal reasons that you can't do it. There's underwriting reasons. You've got to have the ability to service the loans. You got to have the ability to know where the pitfalls are.
Real quick, I'm going to stop you. What does servicing the loans mean? Why don't you explain that?
Sure. Loan servicing is the back end of the transaction, and that's where you're collecting the payments from the borrower, and then you're distributing them to the investors, and you're also reconveying the loan when it gets paid off.
Okay, and that in itself could be pretty tricky.
That's the part that nobody wants to keep doing, because it has to be done monthly for all the entire portfolio of loans we service.
Okay, one quick question though: what is the risk with trust deed investment?
The quick question here, and I see you're trying to
is that too? Okay, so we're gonna answer that one as soon as we come back from the break. If you're listening right now and you have any questions at all, either for myself or my expert guest here today, do not hesitate. Pick up the phone right now. Give us a call at 949-720-1616. That's 949-720-1616. And I do want to remind you that I'm also a mortgage broker, and this is a very complicated market for both buyers and sellers. Therefore, my recommendation is put together a team that really knows the industry, knows your market, and understands your needs. If you'd like some help putting that team together, give us a call at 949-720-1616 or check us out online at moneymatterswithdino.com. We'll be right back after the break and continue our panel discussion with the experts. Make sure you're tuning in because shortly we're also going to be discussing how to get your purchase offers to have the same weight as all cash buyers, and you're definitely not going to want to miss that.
Finally, a reputable legal firm. CDA Law Center, a nationally recognized nonprofit homeowner advocate, one of the most trusted firms in the country for helping consumers with their loan modification process. CDA's attorneys have decades of combined experience guiding their clients through the very complex and choppy waters of loan modification. Call 877-499-4435, 877-499-4435. Finally, honest and ethical advice to gain real results. Call CDA Law Center at 877-499-4435. That's 877-499-4435. Or check them out online at cdalawcenter.com.
Mortgage professionals, are you looking for a company that values you as a loan officer? One that can provide you with the tools you need to grow your business at your pace? Then look no further than CHL Mortgage. CHL Mortgage provides you with a full range of residential loan products and services. You'll be backed by an exceptionally trained team of professionals that can take your clients as seriously as you do. Your clients will be treated with dedicated service, personal integrity, and exceptional professionalism. You'll be able to guide them in the right loan with competitive rates and keep them on the road to achieving life's goals. To get started on advancing your career, call Dino with CHL Mortgage at 949-720-1616. That's CHL Mortgage, 949-720-1616.
Welcome back to Money Matters with Dino. If you have any questions for me or my guests, or if you need help with your money matters, give us a call at 949-720-1616. That's 949-720-1616. You can also check us out online at moneymatterswithdino.com. This segment is brought to you by Citywide Home Loans, bringing you low rates, specials on closing costs, and exceptional service. And guys, I'm telling you right now, Citywide Home Loans is the place you want to be if you want to close your loan fast, because with the way the market is out there right now and offers being so difficult to get accepted, you want to go to a bank that's going to fully approve you and be able to get your deals closed in 15 days or less. All right, we're in the middle of our panel discussion with the experts, and if you're just tuning in, we're having an incredible discussion on how to invest in real estate and avoid risk. Of course, if you missed any part of this show, you can go online at moneymatterswithdino.com and check out the show in its entirety. We also have our own channel on YouTube called Power Players Radio. So joining us again today is from Pelorus Equity Group is Rob Sechrist and also Larry Boodman, a.k.a. Booty, from Keller Williams. Sorry, Booty, I can't help myself. I love saying that.
Please.
All right, guys. So we left off in the last segment with the big question. And Rob, this one's directed at you. The big question is, so what is the risk with trust deed investment?
So the most common risk is the loss of cash flow during the potential foreclosure process. And that is, when the borrower stops making their payments, you need to be prepared as the investor to go the 120 days until the foreclosure can go through, and thus it would go to the sale, and that property would either be sold and you would be made whole again, getting all your principal, all your payments, and any legal costs back, or the property would revert back to you, and now you own that, and you got it basically discounted purchase, and now you can resell that property and add it to your portfolio.
How often does something like that happen, though?
Sure. So the cash flow part, the borrowers being late on the payments, that happens, but usually they reinstate within 30 days. The more important question is how many transactions has there been a loss of principal? And Pelorus has had none. So on that, the more salient point of any losses, we've had none. It does occasionally happen where a borrower may become late, but we reinstate it or will eventually foreclose. Currently, I think that our portfolio has, out of 130 loans, I think we maybe have 1 or 2% that are more than 30 days late.
Gosh, that's nothing.
And that's part of the business model. When a borrower is late, they get a 10% payment penalty, and that just increases the yield to the investor. And most of our investors are actually very happy with that. They don't want to see it go all the way through the foreclosure process, but it's not a big deal. The borrowers are typically pay their payments within the 30 to 45-day period each month.
All right, so quickly then, tell us the process from start to finish. If somebody has the money, they've done the research. Pelorus Equity Group is definitely, their numbers don't lie, the place to go for a secure investment.
Sure.
How does it work?
So actually what they would do is they would contact us, and what we have to do is first qualify the investor that they have the ability to invest with us. And we're regulated by the DRE and the Department of Corporations, and we have certain rules and guidelines we have to follow. So that's the first step. Once we're through that, then what we do is we collect their information, such as their vesting that would be recorded on title, and all the necessary information that we would need from them, so that when they do decide to make an investment with us, that we can rapidly move towards getting that investment documentation out to them. So once we've qualified them, then we just simply add their email to our list. And as new investment offerings have been completely underwritten, then we email that transaction, that offering out to all of our investors. The first ones that commit are the ones that get that. Typically, our emails right now, when we send those out, we usually have the transaction sold within an hour.
Wow, that's impressive.
We just did one for $720,000. That one took a couple days. That's been the longest one it's taken us to do in quite some time. But generally, they're sold within an hour or two.
That's excellent. Guys, if you're listening right now, I highly recommend Pelorus Equity Group. I've been working with them for several years now, and I can personally vouch for them that when I send deals over there, the way they look at them, they do underwrite them the right way. They will deny a file, even if it's a okay file. They'll deny it if it doesn't fit their criteria. And if you're trying to invest your money in a safe vehicle, I highly recommend it. Give them a call. All right. So Larry.
Yes.
I'm sorry, Booty.
Yes.
All right. So just tell me in more general terms, how important is it to, when you analyze what kind of a property, an investment property, or even an owner-occupied property that you're going to buy, how important is it to be in a good school district?
It's very important, and it depends on who is buying that home. This is all based on the demographic that you're serving. So if you're serving a young family that's purchased a home, they're definitely going to be more interested in school districts and maybe crime. And that's going to be pretty much on the top of their list, because if they're planning on staying there for 10, 20 years while their kids are going through elementary, junior high, high school, they want to know that they're in a good school district. They're not going to have to worry about going to another district outside their area. So I would say that that's very important, that to that demographic. If you're looking at an investor type of situation, an investor is going to be more sensitive to cost and money, because they're in it to make money, to make a profit. And so I would think that maintenance cost is going to be at the top of their list when they're looking at a property. That's what's really important to them. They want to keep their maintenance costs low so that they're not putting more money into that property necessarily. But long-term, non-investment, owner-occupied, school districts and crime. I think are top of the list.
That makes sense. I know I look at that on a personal level. What about, public transportation, grocery stores, that kind of thing? Does that even play a part?
It again depends on your area. We've seen in Los Angeles, they're expanding the metro line. They're really trying to push the public transportation. So in Los Angeles County, that may become a more increasingly important factor to look at. I personally, I have a condo in West LA, 10 and 405. I know they're expanding the Expo line right around the corner, and so I think that area, that little pocket, Mar Vista Palms, Culver City, I think those people, there's going to be more demand there because it's going to be closer to a metro line that's going into Santa Monica where a lot of those people work. So I think that's going to move up the list. Grocery stores, things like that. I mean, we're fortunate in Southern California, Orange County, and Los Angeles County. There's good grocery stores pretty much all around. So I don't know that that's a huge factor for a lot of people.
It's great advice. Thank you. So we've been talking about how to invest in real estate and avoid the risk. But right now, I want to switch gears just a little bit and talk a little bit about how to get your purchase offers to have the same weight as all cash offers. I bring this up because in today's market, if you're out there making offers right now, you can probably sympathize with what I'm going to have to say. And it's extremely painful because you want the house, you're willing to pay for it, you're there immediately as soon as it gets listed. Sometimes you're even making offers without seeing the dang house just because you're so tired of losing. But somehow, some way, you always end up losing to these guys that have all cash offers. So what I want to do is, with the two of you and also something I've been doing with my business lately, how we're starting to get offers to go through. And I want to ask you guys as professionals, what is it you do to compete with these all cash offers? Booty, let's start with you.
Okay. We try to focus on 4 key areas: speed, technology, pre-qualification versus pre-approval, and the emotions that are involved. Now, let me go back to speed and technology. Those first 2 things go hand in hand. When you have a great team that's working for you, you can be fast. You can move really fast. We like to set our clients up. They get email alerts right when a new listing comes on the MLS. So they're searching every day. They're getting the email alert. So a house comes up that they like, that matches their criteria and their location. They see it. They call us. Hey, I saw this listing. Great, let's go out and see it today. If we can't see it today, it's not because we can't get into the home. It's because the home's not available. But they're going to be the first ones in when it's available. So the speed is really important. The other technology that comes into play is we use iPads out there. So we take a buyer to a home. They see the home. They say, this is a great home. I love it. I mean, this is what we're looking for. Let's do an offer. Great. We're going to sit down on the iPad. We're going to put that offer together. We're going to have a digital signature, and we're going to email it right there on the spot, right from the street or inside the home, wherever we may be. Getting your offer in first is critical. Being the first one to the game. Early bird gets the worm, right? So that's speed and technology are key. Everybody's looking for homes online now, so that's where we really have to make the difference. The other area is pre-qual versus pre-approval. And Dino, you know a lot about this. Pre-qualification letter, it's nice if you're in a flat market or a declining market. It's nice. It says that your borrower is a good borrower and they would qualify for a loan.
Let me actually touch upon that a little bit because, being a mortgage lender for years now, the way we've typically done it is somebody sends all their documentation in, and I've been doing this for a long time, so I look at it. I sometimes have to put it in the computer and the software and actually run some of the numbers. But for the most part, I can just look at somebody's tax return on chicken scratch. I can, on a little sheet of paper, I can figure the whole thing out. And then most of the time I just write a letter saying, you've been pre-qualified. Nowadays, completely, totally worthless. It is absolutely worthless to do that. And the reason being is because you got cash buyers out there. So what I started doing is I got so sick of I have literally a drawer just full of people that I pre-qualified. They've been out looking for houses, can't get an offer approved. And so what I did is basically I started running it through the system of full pre-approval. In other words, I get all the documentation put together, and not just the tax returns and the pay stubs and all that, but all the supporting documentation, the stuff from the IRS, the stuff from their employers, the stuff from the banks, and then I send it to the underwriter. Now, that's a difficult thing to do because that costs a lot of money. We're truly underwriting a file that doesn't even have a property, and that does cost a lot of money, unfortunately. But we have to be bold, and we have to do something that's different from everybody else. Otherwise, we're not going to help our clients get into houses. But by doing this, here's what happens: the agents that are all working with us now, what they get to do is they go get to write an offer that's no loan contingencies, 15-day closings, appraisal contingency done in 10 days. And for those of you that are out there looking for homes right now, you know what that means. Having a 15-day closing is just the same as an all-cash buyer, because you still have to do all your inspections and all that stuff, and that's about how long it takes. So it's absolutely key. And then to top it all off, I do a close-on-time guarantee. And what that is if I don't close on time, I personally will give the seller $100 a day until the day I close. So if you're in the top tier of price offerings, I don't see any reason why you shouldn't be able to get it.
Yeah, exactly. I mean, you nailed it right on the head. Being pre-approved and being ready to go is key. The only other thing that I would say that makes a really big difference is changing your contract, your offer as a buyer, from a piece of paper with a number on it to a person, a human being. Because right now, sellers are out there in a standard transaction. You could pull on those heartstrings a little bit, and you could say, "Listen, I'm not an all cash buyer, but my finances are ready to go. Here's all that. But I have a family. We love your house. We want to be there. We're going to have our buyer write a personal note and send it in with the offer, because when they hold up that piece of paper and the agent saying, here's the 35 offers we got this weekend, this one came with a handwritten note. John P. Q. and his family, they love your house and they really want it, and they have the money. That's going to make a big difference.
I think you're absolutely right. People don't value that sometimes. There is definitely an emotional piece to real estate. And when you're buying a house in a family type neighborhood, especially, I know that my neighbors, when they sell, in fact, my actual neighbor, because I still keep in touch with him, he moved to Florida, and he said, I hope I did a good job picking neighbors for you. I wanted to find somebody with young kids and everything, just so they would mesh with your family.
Absolutely.
Well, when we come right back after this break, we got Rob Sechrist, who's going to give us the secret here. There's actually some little secret you can do on the paperwork part that very, very few people know about. And we're gonna keep you online here. You're not gonna be able to change that station, because you're not gonna want to miss this. You're listening to Money Matters with Dino on KTLK AM1150. If you have any questions at all about your mortgage, current rates and programs, or you're looking to buy a new home or investment property, give us a call. We're at 949-720-1616. That's why we're here, to make sure you're getting the most out of real estate that you can. Protect your finances, protect your family, and be real estate wealthy. Call us at 949-720-1616. That's 949-720-1616, or check us out online at Money Matters with Dino. Stick around. We'll be right back after the break.
Mortgage professionals, are you looking for a company that values you as a loan officer? One that can provide you with the tools you need to grow your business at your pace? Then look no further than CHL Mortgage. CHL Mortgage provides you with a full range of residential loan products and services. You'll be backed by an exceptionally trained team of professionals that can take your clients as seriously as you do. Your clients will be treated with dedicated service, personal integrity, and exceptional professionalism. You'll be able to guide them in the right loan with competitive rates and keep them on the road to achieving life's goals. To get started on advancing your career, call Dino with CHL Mortgage at 949-720-1616. That's CHL Mortgage, 949-720-1616.
Finally, a reputable legal firm. CDA Law Center, a nationally recognized nonprofit homeowner advocate, one of the most trusted firms in the country for helping consumers with their loan modification process. CDA's attorneys have decades of combined experience guiding their clients through the very complex and choppy waters of loan modification. Call 877-499-4435, 877-499-4435
Finally, honest and ethical advice to gain real results. Call CDA Law Center at 877-499-4435. That's 877-499-4435, or check them out online at cdalawcenter.com.
Thank you for hanging with us. This is Money Matters with Dino, and I'm your host, Dino Katsiametis. I'm here to give you the tools and information to build a secure and strong portfolio with real estate. If you have any questions and want to get a hold of myself or my guests, give us a call at 949-720-1616. That's 949-720-1616, or you can check us out online at moneymatterswithdino.com. This next segment is brought to you by CDA Law Center, expert loan modifications with decades of legal experience in real estate. So normally we go right into our Ask Dino segment where the listener basically just asks us all the questions they have, and they do it either through Facebook or emailing us directly. But we've been promising you the big secret from Rob Sechrist, so we're gonna hold that off just for a minute, and Rob's gonna tell us the what do you want to call it, Rob? Let's call it something exciting.
Well, it's just the way you get these offers to have the same weight and competitiveness as the all-cash offers that you're competing against in the rehab and the flipping world out there, where you're buying these as investments. So
I got to tell you that real quick though. The reason why I'm excited about this and why I'm trying to make a big deal, because I didn't know about this. I thought I knew everything in the real estate business, and I didn't know about it. So tell us,
sure.
What's the secret?
So it breaks down to just doing these three things on your purchase offer. So you obviously want to make it as an as-is purchase with no contingencies. You want to have a 10 business day closing. And the secret to it is on the page 1 of the RPA. There is in the financing section.
Hold on. So just so if you don't know, RPA, residential purchase Agreement. Thank you.
Yeah. So when your agent is making the offer, on page 1 of the offer, there's a section down towards the bottom that says financing. And in that portion, you can mark that it's all cash or there's a financing contingency. What most people and most agents never realize is that there's another box. It says other. And there's a little line there that you can describe it. And so what our clients do is they mark other, they check the box as other, and then they simply put equity/financing is not contingent on credit, income, or liquidity. And that's what they do. We include with all of these offers a pre-approval letter from Pelorus that supports that purchase price as well. So it's that package of the offer being with as is, no contingencies, the quick close, 10 business days, and the other box checked. What happens there is generally most of the best offers or strike prices are either REOs or short sales, and you've got people processing these offers through their systems. And my gut feeling is that they either have a box for cash or financing, and when they come across an offer that says other, they don't know what to do, so they just leave it as cash because they don't know that there is financing or not. And then as it goes through the system, even if the short sale approval letter comes back and says all cash offer, you're still okay. And the reason you're okay is because contract law supersedes a approval letter that came through from the bank. Once they've approved that, they've approved it on their side, but the bank has signed your purchase agreement, which is there. That means that it's contract law and it's going by the purchase offer.
You guys get that? This is why it's so important to be working with somebody you actually know. And I'm sorry if I'm not making somebody happy here, but when you're working with a friend or an aunt or somebody that barely does real estate, and they're doing it on the side, and you're just trying to be nice, sometimes in a market like this, you're never going to get into a place. It's a little more entailed than that, and you've got to be working with a professional. I highly, highly recommend that you find a team that works well with you and that knows exactly what you want. And if you need help putting that together, you can call us at 949-720-1616. What was that, Rob?
I just wanted to mention that we have a copy of this language on our website, and you can find us through your site.
Yeah, go ahead and tell them. What's your website?
It's at pelorusequitygroup.com, and that's PELORUS equitygroup.com.
And Rob, would you guys lend on those properties at auction?
We do not provide financing for the auction purchases because they are uninsurable transactions. You cannot get title insurance, and thus we will not close any transaction without a full ALTA policy. However, we could provide you a cash-out refinance loan after that purchase has happened, or we could take out cash off another property, and you could have the cash and go buy the properties on your own.
All right, Phil, you ready for the Ask Dino segment?
All right, here we go. Do I need a jumbo loan if I'm buying a multi-unit building?
Good question. And the answer, multi-unit building works just like single-family residences. There's a conforming loan limit, which in Los Angeles, Orange County, you're basically looking at $625,500. Now, if you're buying up to a 4-unit, which is still considered residential, it changes with every unit. I'll give you those quick breakdowns if I can remember all these accurately. But let me see. Let's see. We got first. So the first one's $625,500. The second one is $800,775. 3 units is $967,950. And if you have a 4-unit, you can still get conforming rates up to $1,202,925.
You have a very specific memory.
I know. I wrote it down ahead of time.
My mom is living on a fixed income, and someone suggested a reverse mortgage for her. How do reverse mortgages really work?
So I'm not a reverse mortgage expert. I usually refer them out to a couple good friends that I highly trust. But I have done a little research on them because a lot of people have such a bad taste in their mouth about it. But it's typically not the people that actually got a true reverse mortgage. They got some sort of an alternative loan way back that sure was different, but they group it all into these reverse mortgages. So reverse mortgages for the right people can be good. For the wrong people, obviously not good. So my suggestion is do plenty of research on it. Talk to enough people. And you have to actually go through some sort of a counseling before they even let you have it. So, it's a good product. It's a good product for the right person. So I do recommend them.
Okay. Do I need an estate planner if I want to leave my home to my children?
Well, I'm a big proponent of doing everything the right way ahead of time legally, because I've seen too many situations where parents, pass and kids are left with just a big pile of doo-doo and don't know what to do with it. And, part of your obligation as a husband, as a father, is to situate your assets properly and, take care of it the right way. Because, you might be gone and you no longer have to worry about anything. But if you love your family, you should absolutely talk to an estate planner and set things up the right way.
Okay. I'm going to a foreclosure auction for the first time. What do I need to bring?
That's a good question, and I'm going to let Rob Sechrist answer that because he's the private money guy and deals a lot with these kind of things.
Lots of cashier's checks in various amounts.
Do they actually take cash at these auctions too, or just cashier's checks?
To my knowledge, they only take cashier's checks because you would have all these people wandering around with cash, and you wouldn't know who it came from and who to give it back to.
Okay.
So I don't think that they take any cash, to my knowledge.
So literally, these people just have cashier's checks, just tons of them.
Anybody going to it has, probably anywhere from $500,000 to $2 million, and they're written in $100,000 chunks, $20,000 chunks, $5,000 chunks, $1,000 chunks, $500 chunks, $100 chunks.
That's insane.
And the reason that is the case is because you don't want to give a cashier's check of $1 million for a $900,000 property that you purchased, and then wait for the state to return that $100,000 when you could have used it to buy the next property.
Well, thank you for listening today. It's been a great show. We actually spoke a lot about how to avoid risk in the real estate market, which I really love, and we did the how to get your purchase offers to have the same weight as all cash offers, and that right now happens to be probably the biggest piece that I would think is the most informational out of everything, because everybody trying to buy houses right now cannot get their offers accepted. So I hope you heard that part. If you didn't, you can go on our website at any time, moneymatterswithdino.com, or our YouTube channel, Power Players Radio, and make sure you catch that. Well, that's the end of our show. Thank you again so much for listening to Money Matters with Dino. If you have any questions about anything you heard here on the show today, don't wait. Pick up the phone and get the answers you need. We're here to help. Phone number is 949-720-1616. That's 949-720-1616. Or once again, you can find us online at moneymatterswithdino.com. Thanks to my expert panelists this week from Pelorus Equity Group, Rob Sechrist, and from Keller Williams, Larry Boodman, a.k.a. Booty. Booty. Thanks, guys. I really appreciate you guys being on the show and sharing all your wisdom with you. Also, a big thank you to my producer, Phil, for all the work you do, Phil. Thank you so much. And a little bit of the editing maybe to cut out some of the bad stuff that I say. Anyways, a very special thank you, even more so to you listening out there. I really appreciate that. You're really the reason why I come back here every week. I love doing the show, and I truly hope you get as much out of it as I do. We're here every Saturday from noon to 1, and we're going to be picking up an extra hour pretty soon from noon to 2. If you missed any part of the show, go to moneymatterswithdino.com, and it'll be there for your listening pleasure. Thank you all so much for listening. Remember, your future is up to you. Bye for now.